What's going on, guys? Welcome on in. We lost $322 trading the S&P 500. I might be a couple shades darker. I might be a little bit red, but these were traded, or these two trades were back on Friday, the day that I left in the morning. I'll kind of show you the setups. I will show you the setups, and we'll cover all that stuff like we usually do. And yeah, I have no positions open. I have just a little bit of, all I have is a little bit of crypto throughout this whole craziness that's been going on. So I don't really have much to say on it, to be honest, other than people are shitting their pants, and it's not that surprising to me. What is unfortunate is that I was looking to short, and I did short, and my two shorts just so happened to not pan out despite the market going substantially lower, like substantially lower than my entries here. It's just that the trades that I took on the day that I took them just didn't work out, and I'm making this a couple days later because I had to run. So we lost about $160 on both. I don't want to. My max risk is $200 on this account. It's a $25,000 account, so not bad. But it's the first two trades of the month, and I don't see a trade opportunity right now. And I'm about to be flying out tomorrow morning, and then I don't know how much service I'm gonna have. So I don't think there'll be much this second week, or this first full week of August. I think the second half of the month, I'll be back to kind of see how things are shaking out and if there's even good setups. So that's kind of where my head is at. But these were taken at 9:37 and 9:56 a.m. Central Time on Friday, August 2nd. Okay, so let's jump back to them. They were both on the S&P 500. So if I jump over to the S&P, here's the thing. Here's my blue line that I draw on the daily time frame. That's from the 5-minute chart, which I'm going to jump to in a second. I have my little risk reward profile there still as well. You can see how we're substantially lower on the daily time frame than where my trade was. It just so happened that my trade was around low of day. Now, did I necessarily know? No, but there was a couple things I could say looking back were red flags. Red flag number one is that I took my trade, when you're looking at the daily time frame, I took my trade somewhere in here. Well, not somewhere. You'll see exactly where. And that's just after we pretty much filled through this volume gap. Okay. High volume node essentially sits right in here. And as we get towards that, I'm not a humongous fan of looking for trades there. Now, that's on the bigger time frames. When I go to smaller time frames, I'm not as worried as long as the bigger time frames are somewhat aligned. In this case, it kind of was, but also I knew I was cutting it close, as in, we had a big move already. At the time, the S&P was down already pretty substantially from the day prior. Here's the move. So I looking back, I definitely was looking for a bit more than maybe, but at the same time, I think to myself, I don't want to make a percentage on the chart necessarily say, no, you can't trade, but more likely than not, it's not always going to be a great setup. Another piece that I think I didn't do a great job of was in terms of my target. Look what I kind of knew that going in, and so I kind of sketched myself out. So I was only looking for a 1.25 to 1, which I don't usually do. I look for 1.5s or more usually. So I kind of knew it by having a pretty small target. I kind of knew what I was getting myself into, meaning I knew that we were down a lot and that a substantial push lower would be a lot to ask, given that, hey, the S&P hasn't dropped, 2, 3, 4%, whatever the number was. On that day, it was down 2+, so it would have to go down nearly 3% on the day. I'm like, that's a big move. We haven't seen that. It's not very common. That's for sure. So probabilities, right, not necessarily on my side, given that move is not common. Doesn't mean it can't happen, just means it's not very common. That was my mistake. Now, I traded it twice. So the first trade was we had this big move down in the morning, okay? And then we see how we have this consolidation right here. I get in on this break right here, and I go stop loss over the consolidation highs, which you can see we got wicked out right here. Now, the reason why I traded it again in looking back could have easily been a one and done. No, it had we not come right back down. Because we came right back down and barely wicked me out, I have traded this before many times, very similar setups. When I do get, an entry, a valid entry, and then I get wicked out, we come right back down. That second trade is almost like the second time's a charm. It's almost like that. Now, of course, you have to manage your risk. It's not dump the boat, unload the boat. No. I managed my risk. I had the same thing, so I lost the same exact amount of money that I was worth in the first time. But I was looking to make like $250 on the trade. So had it worked, I would have been down 160, made 250. Okay, positive $90 in the day. It's okay. Great. And that's if you go back to a lot of trade recaps, you'll see a lot of them that maybe our smaller winning days are just like that, where we have the first trade that gets a quick entry and then gets a quick stop out on a wick. We come right back. That second entry to charm and usually works. In this case, it kind of did. It got a little bit further as I entered back in here as we pushed back below that level, and then just couldn't get the push. And then we got stopped right back out. And then the writing was on the wall. Once that flush, that follow through was not there inside of here, I could probably have cut it off for even a small win or even a break even or even a smaller loss. Because if we're gonna play this game and you're gonna play that little like, oop, here we go, breakdown, oop, sorry, nope, and then come back down, that second time as we come back down usually is where the momentum comes. And if it doesn't come, chances of the trade working out, not very good. And so that was that's what happened. So 2 attempts on it, 2 L's. So we're coming off the back of July, which was pretty good. If you want to go back to the July recap, go back. It was one of the last recap videos you posted up. We made $1,300, something like that in July. And yeah, I mean, so we're hopefully, my plan, my goal is to have a good month of August. Doesn't mean that it has to be a green month. I just want it to execute well. And so far, I'll say not bad, but I definitely I didn't need to put myself in that trade. I didn't need to take that trade, to be honest, when you jump out to the bigger time frames. But overall, though, eyes were kind of in the right place. Like, we had weakness. You're playing the short side, and we got a further push going into Monday, obviously, but it just didn't pan out for my setup that time on that specific trade, which is kind of how it is and kind of how it works. But that's kind of how I like things, because talking about this overall market just for a second, I might as well. I like, this all happens, right? And I do care, but I also don't give a fuck. And I mean that in the nicest way possible to people who are getting destroyed, because you are able to see this and have like legitimately no emotions. Because in the past, I would be heavily invested into some like dip buys, or, oh, I'm looking for Nvidia to go higher, and I'm looking at my Bitcoin. I do have some Bitcoin, but I have that. I'm letting that thing just do whatever it wants to do. If we go 100K plus, I'm out. But if I'm just letting it do with this for now, whatever it wants to do. I'll buy more if it goes substantially lower and we have a bigger bear market in the next couple of years, whatever. But it's easy from a trading perspective now to come back, saying to yourself, I just scanned the charts. I just got home now. It's 3:51 Eastern time. I scanned the charts in 10 minutes and I was like, I see absolutely nothing that would fit my criteria that makes any sense for me right now. So I'm going to fly off to Montana and I'm going to just, check in every so often. But I don't think this week is going to be tradable for me based off, all that stuff. But I can do that because I'm not shitting my pants with next Friday expiration options that I'm worried about, where I was in the past. I like the situation now because I have a clear head and I only am going to trade when I see opportunity. That's it. If you're a buy the dipper, the only opportunity that I see right now is this guy right here, in my opinion. SVIX. Short the VIX. I mean, now the VIX just spikes up. Now, of course, this could go lower. It could. The VIX just spikes up to like one of the highest points we've seen the VIX since COVID. Like, literally, it hit up to 66. COVID, we had a spike to 85. It could go higher, don't get me wrong. But this is where maybe there's opportunity. Maybe I wouldn't be able to see that had I been getting destroyed by 20 other things, or I wouldn't be able to look at the charts and maybe there was an opportunity, next week or this week if I was around, that I could see on the short side or the long side, but I wouldn't be able to come at that with a level-headed approach and like just kind of a what is in front of me, not what do I want to happen approach, as long as I am not attached to what happens. And even if I had a substantial amount of money invested in the market right now, which I don't, even if I did, if you're playing the game of dollar cost average, ride the waves, I mean, it just, okay, cool. Like, this is, we went up for so long, so strong, so steady. These things happen. You need them to happen. Maybe it's a bear trap. I don't know. But that's my 2 cents. Hope it was helpful. That's the recap and a little bit more. I'll see you guys in the next one. Peace.